What if I told you an AI predicted a crypto pump and dump before it happened, to the hour? No insider leaks, no Telegram alpha, just raw, unfiltered data. The crypto market has always been a playground for whales, bots, and backroom manipulators. Pump and dumps? They're not a glitch in the system, they are the system. Most retail traders only realize it when they're left holding the bag. But what if we could flip the script? This isn't some sci-fi fantasy. One AI model, trained on blockchain patterns, social sentiment, and microtransactions, flagged a suspicious coin days before the spike. It noticed subtle wallet movements, micro-buy clusters, sudden shifts in liquidity, even a wave of bot-like tweets before the first influencer ever mentioned the project. This isn't just a story about a shady coin getting pumped. It's about what happens when machines start connecting dots faster than any human ever could. Today, I'm walking you through exactly how this AI saw the rug before the rest of the market felt it. The behavior, the data, the aftermath, and what it means for the future of trading. Because next time it could be your portfolio on the line. Stay tuned. You're about to see behind the curtain. The coin was called Globit. Market cap? Under 5 million. Trading volume? Barely a blip on the radar. But the AI flagged it anyway, 3 days before the pump. Here's why. Globit was floating quietly on a mid-tier DEX. No major listings. No influencer buzz. Just a community Telegram with about 800 members and a vague roadmap full of buzzwords. AI-powered, cross-chain, quantum-proof. You know the type. It looked like every other throwaway altcoin. But the AI wasn't looking for noise. It was trained to detect patterns. Real, repeatable, quantifiable behavior that precedes manipulation. And Globit checked multiple boxes. The first red flag was wallet clustering. Dozens of fresh wallets, all created within the same 24-hour window, began funding themselves with small, identical ETH deposits, just enough to make a few $100 purchases. These wallets then began buying Globit in synchronized intervals, down to the minute. Second, a sudden injection of liquidity to one specific trading pair, USDC Globit, gave the illusion of depth. Enough to bait traders, but shallow enough to control. Then social media lit up, barely. Just enough noise to raise a whisper. Twitter bots. Reddit accounts created that week. Comments like, Globit is gonna fly, repeated word for word across platforms. The AI didn't panic. It cross-checked with historic cases, assigning a confidence score. The number was high. Too high to ignore. And then came the final trigger. A dormant wallet, previously linked to a 2023 DeFi scam, reactivated and bought $30K worth of Globit. That single action sealed it. The AI's dashboard lit up. This wasn't speculation anymore. Globit was about to pump and dump. By this point, the AI wasn't just watching Globit, it was tracking everything orbiting around it. Wallets, social sentiment, on-chain velocity, even transaction signature patterns. What it uncovered wasn't just suspicious, it was surgical. First, wallet behavior went erratic. Early buyers began fragmenting their holdings, splitting Globit into dozens of micro-holdings, each stored in a new wallet. This wallet fracturing is designed to evade detection on centralized exchanges and make it harder to trace the sell-off. But here's the kicker. Many of these wallets were programmatically generated. The gas fees were optimized to the exact same percentile, a signal the AI recognized from past coordinated exit scams. Then came the timing sync. Multiple wallets, supposedly unrelated, executed buys, swaps, and transfers within milliseconds of each other. Different gas speeds, different entry points, but nearly identical TX behavior. Humans don't operate with this level of synchronicity. Bots do. Next, the social pulse exploded. In under 6 hours, mentions of Globit surged by over 800%. But the AI wasn't fooled. This wasn't real engagement. It was low-effort noise. Burner accounts, recycled phrases, same graphics. The AI even traced image hashes to a prior meme campaign used in a 2022 rug pull. Reddit bots began echoing Globit in fringe forums, targeting degen threads. Meanwhile, Telegram pump groups, newly formed and strangely synchronized, spammed links with the same call to action. Don't miss the next 100x. All signs pointed to manufactured momentum. Then the volume anomaly hit. In 24 hours, trading volume exploded from 50K to 700K. No roadmap update, no listing, no investor. Just hype, manufactured, algorithmic. That's when the AI triggered its final tier alert. Stage 2, pre-pump. In historical terms, this phase precedes the dump window by an average of 18 to 36 hours. This wasn't speculation anymore. It was a ticking time bomb. The AI predicted the parabolic spike would begin around 7 p.m. UTC and that the dump would follow before the next daily close. It wasn't just tracking a token. It was reverse engineering a playbook. And the first candle was seconds away from lighting. At exactly 7:12 p.m. UTC, the first green candle exploded on the chart. Globit's price spiked 27% in under 5 minutes. The AI had nailed it. Buy orders flooded in from all angles, retail wallets chasing the breakout. Discords lit up. Telegram groups spammed the same 2 words. It's happening. On Twitter, new Globit believers suddenly appeared out of nowhere. I told y'all. Still early. $1 coming soon. But behind the scenes, something darker was unfolding. The orchestrators didn't dump all at once. That's not how professionals operate. They staggered exits across dozens of wallets, each selling just enough to keep the momentum going. Small wallets dumped into rising liquidity, then paused, then dumped again. New traders saw the chart and mistook it for strength. They aped in. They bragged. Screenshots of profits flew across Twitter. By 8:03 p.m., Globit had doubled. A $100 play now showed 220. The crowd was euphoric. But that's when the AI issued its Stage 3 alert. Coordinated sell-off detected. It spotted a sudden spike in slippage, a drop in liquidity depth, unusual gas spikes, bots rushing to exit. Then came the avalanche. Prices plummeted. Limit orders evaporated. Some wallets couldn't even sell. Failed transactions, maxed out slippage, panic. By 9:14 p.m., Globit had cratered 76% from its peak. Millions were gone in under 2 hours. The chat was chaos. What happened? Where's the dev? Is this a rug? But there were no answers. Just silence. The only one that saw it all, start to finish, was the AI. And it wasn't surprised. In the hours that followed, Globit's social channels went dark. The dev wallet hadn't moved, but the insiders had already cashed out through dozens of proxies. Retail traders were left with bags of illiquid tokens and a chart that looked like a cliff. But for the AI, this wasn't the end, it was validation. The model's predictions matched real-world outcomes down to the minute. Accuracy scores soared. It had successfully navigated wallet behavior, social sentiment manipulation, and liquidity traps to call the rug before it dropped. And the implications? Massive. If an AI can predict pump and dumps with this level of precision, it changes everything. It could protect retail investors, flag exit scams, build real-time trust scores, maybe even force transparency into the most opaque corners of crypto. But here's the twist. The same tools that detect manipulation can also be used to create it. That's the arms race we're in. Globit wasn't just a random rug. It was a case study in what happens when humans game the system and machines start watching the players. The AI isn't perfect, but it's learning faster than we are. The next Globit? It's already out there. The question is, will we see it before the next candle lights up? So what did we just witness? An AI spotted a rug pull in real time, predicted the pump, tracked the manipulation, and watched it implode. Not with a crystal ball, with data. And if this technology becomes accessible, the next generation of traders might not just survive crypto. They might finally have a shot at winning. But that future isn't guaranteed. The same algorithms that protect us can be repurposed to deceive. The battle between signal and noise is just getting started. The smarter the AI gets, the more sophisticated the scams become. What used to be guesswork is now strategy, and the lines are blurring fast. Here's the bottom line. If you're still trading based on vibes and moon emojis, you're already a step behind. If you want to stay ahead, subscribe. This channel doesn't just chase trends, we break them down, analyze them, and show you the hidden forces shaping the markets. Like the video if this blew your mind. Drop a comment. Should AI bots be public or private? Should they be regulated? And share this with someone who thinks they can still spot rugs on gut feeling alone. Because in this market, it's not about what you feel, it's about what the data knows.